Welcome. This is Bill Barker from the Motley Fool, and with us today we have Deanna Jurgens, who is the CEO of Armanino Foods. Been in that role not that long, so there's a lot to learn from here. And if you've missed this company, you've missed a good time as an investor. And let's find out why that is and what to look for next. Welcome, Deanna.
Thank you, Bill. It's great to be here. Thanks for having me.
Thanks for coming. So, Armanino Foods, not a name that absolutely everybody is going to know right off the bat, but a bit of a hidden giant in one niche in the food world. And if you could let us in on a little of the backstory there as just an intro, that would be great.
Sure. Yeah, it is a hidden gem, but we have been around for quite a while. We are a frozen foods Italian sauce primarily company, and our founder Bill Armanino came from northern Italy, and his family immigrated here to Northern California. Where they started a herb farm actually, and his mom had brought over a basil pesto recipe. And so, what's really cool about this story is that recipe is really what started this company. They ended up selling the farm and really focusing on selling sauce. And basil pesto is really what we are known for, but we sell more than just pesto. We sell globally inspired sauces. We have some pasta and meatballs, but we are largely in the food service channel. And we sell here in the United States and some internationally as well. But we've been around for a while, and it's a great story that I'm really excited to continue to drive.
Well, we've heard where the Armeninos came from, and you have come into this role recently this year. And before that, you were at Bondwell working with fresh produce, and now you're in the fresh to frozen part of the market. So, can you explain why the Armanino process is better than the just the store shelf pestos that are out there?
Yeah, and in my career, I've kind of seen the whole store, if you will, from shelf stable to frozen to fresh. But coming over here, why our product is so great is we are a clean ingredient label sauce, and we use nothing but the freshest quality products. And so, right when we produce it, we then freeze it. And so it really maintains that premiumness, that freshness. So where I was before in produce, you have 15 days from when you cut that salad to having to sell it. So that quality can erode really, really quickly. But for us, because we have high quality, and then we freeze it, we have a shelf life of up to 18 months. So it gives us a lot of flexibility in the selling process. And it was something I was really excited to take the experience that I have from all of the different companies that I've worked with, but really to see the product, to try it, to see the success in the market, how our customers and consumers respond, was really what drew me here. And but my fresh background really gives me an appreciation for quality. And that whole freshness life cycle that we absolutely adhere to here at Armenino Foods.
So pesto is the biggest part of the origin story, and but there's other products, of course, beyond that. What percentage of sales is pesto for the company?
So our pesto is really the majority of our sales today. So it is our gateway product. It's really what we are known for. But we have, up to 30 different sauces that we produce today. And I would say they're really incremental and unique to our pesto sauces. So it's roasted red bell pepper, Southwest chipotle, chimichurri. It's very unique and different and incremental. But it's a lot of the opportunity that we have as a company is we sell a lot of pesto today, but we have a lot more than that. So I'm very focused on what we can do to grow our secondary sauces that I feel are equal in taste and quality to our core pesto.
And if I were having some of your product, some of the pesto, I might be having it at home. I might be having it in a restaurant
Mhm.
because you supply to so many of those. And are you seeing anything right now in terms of consumer preferences trading down out of the restaurant category and having more food at home yet? There's some noise about that. I don't know if there's signal or if that is something that you're experiencing.
Well, just looking at the industry, I think it is food service is really a signal, right? So as you see food service start to decline or slow, you tend to see the retail channel pick up because it's a signal of consumers pulling back and wanting to buy more or eat more at home. And but we've been very fortunate because I think that our product is something that can really help a lot of restaurants and food service channel operators to differentiate. And it's a premium. It's something that's familiar yet unique, but not at a high cost. So we have been able to continue to sell and continue to grow across the food service channel, as well as focus on our retail outlets. Although food service really is our primary channel in which we sell to today. So broadly, trend-wise, we are seeing a little bit of a slowdown in food service, but for us at Armanino, that has not been the case.
And sticking for the moment with macroeconomic effects, your recent shareholder presentation deck, I think it was at your annual meeting, went into some strategic procurement. And this is part of uh, your work on margins, which has been very effective, I suppose. Uh, Possibly tariff related, possibly not. What would you say about the strategic procurement of the ingredients and what you need to do and have been doing?
So, inheriting this business, so what I would say is that this company has done an excellent job at managing cost and really managing bottom line and controlling those costs while growing the top line, which is why we have such a terrific P&L today. For me, the now stepping in here to say, how do I continue that success going forward? So, one of the areas that I'm very focused on is looking at this strategic procurement, strategic supply chain, and what do we need to do in an environment of inflation, of tariffs. So we are looking at how do we lock in long-term contracts so that can really help us to control cost, ensure supply, and um, and then we are also looking into purchase in bulk too, so that as we have like basil, which is one of our core ingredients, how can I lock in contract wise to, a tonnage number so I can get a guaranteed rate. So these are the things in an environment like what we're in today that gives us more assurance by getting that long-term nature where I can, where it makes sense, that will help to advantage us from a procurement and supply standpoint.
And referring to what you've inherited, this is a company that's been around in the public markets for 2 decades now, and the investor deck that is on your website, and people can do some research there. Looking at that refers to this now. Your tenure, I suppose, as being the next chapter.
Yes.
And what should we read into that? What is the next chapter? Is it going well beyond pesto, or just further dominating the pesto space, or a bit of both?
So I have been really clear as I joined this company on where the opportunity is, and it's one of the reasons why I came here. Not only is it great to have such a strong top and bottom line, no debt, cash in the bank, so I have a lot to work with there. But I think what's really exciting to me is the white space opportunity that we have. So one of the things I said I want to really focus more so on or keep us focused on is our core competency, which is sauce. That is where we excel, that is where we differentiate, and that is where we are profitable. So how do I double down into this sauce category that we currently play in? Within that now, we have multiple angles in which we can go. So as I talked about, this US market that we dominate in within this sauce today, I feel there is a tremendous amount of opportunity to go beyond pesto. So how do we take the customers that we do have and how do we sell more to? So how do we really expose them to all these great sauces that we have that can expand their menus, expand their day parts, and bring in new consumers into the category. And we can also go after new customers. So we have largely really focused our efforts on regional and local operators. That's where we've been, that's where we excel. Where I've spent a lot of my time prior to joining Armanino is really at the large national accounts. And so as I started to have some preliminary conversations with these guys about sauce and about the willingness and would it be something of interest, very strong response. So I have been hiring a team to help me really go after this kind of tier one QSR, quick service restaurant, national account footprint. So where we largely do not play in today. So that is a big white space opportunity in addition to expanding our distribution and our core of where we already are. So getting into national accounts. And then the other area that is really growing strong for us is international. So our international business that we have today is really looking to continue to grow. But then I'm getting a lot of inbound interest from other areas around the world into our sauces. So I spent time really looking to say, can we expand our sauces into North America, into Europe, in the Middle East, Africa? So that is a little further out, but that is another area of growth that we are looking to expand into. So it's a great opportunity to come into a business like this that where we have so much opportunity to grow and expand in a category that we know very, very well and we're very profitable in. So that for me over the next several years is really where I'm going to be focusing my efforts for the company.
And when the materials and when you talked about selective expansion, it's really focused on the sauces and excluding for the most part everything else because you're also in the pasta business, not just the sauce.
Yeah, so which is largely our retail channel. So we do have some limited co-manufacturing today. So our pasta, our meatballs, those are through co-manufacturers. And we do a good business there. We do like to have the entire Italian offering to our consumers. But one of the things for me is that we're in the frozen food aisle. And so for you, Bill, as a consumer, when you go into the grocery store and you go, I want pesto, where do you go? You probably are not going down the frozen food aisle. So
I don't think my wife would allow me to do any of the shopping for anything that actually mattered for the end product. So, but
case in point.
she would know to go in the
But
frozen
she
food
may, I
aisle
don't
maybe.
think intuitively she would probably go to the fresh section. She would go to the shelf stable. But what I have found is that intuitively consumers don't think to go down frozen food to get their sauces. And so it is very costly for us to educate consumers to bring them down there. And they do go, but it's at a it is at a less profitable rate for me to grow that business. So instead of abandoning the retail channel, which I think is extremely important, and if we could tap that into the future, I think it represents a lot of growth for us. So how do I think about the retail channel in terms of the strengths of Armanino, which is frozen, which is food service, which is our operators. And so I think that our opportunity is really to pivot a little bit and say, for our grocery channel, could we sell to the deli? So back of house where they're making their prepared meals and sell them our sauces to be a part of those prepared meals is an example of, I think, how we could maybe leverage our strength of food service and tap into that retail channel. We could also look at operators like Costco or Sam's Club who cater towards business operators. and really cater to those clubs where we carry our products? Or how do we go online with Amazon or Kroger or Walmart with a digital shelf that could really showcase our products, even though they're frozen for a consumer that's not walking down an aisle, but they can get all of the understanding of what they are buying and do that online, which is really an emerging trend there too. So I see retail as a opportunity. It's small for us today, but as I put focus against that channel, it's not to go away from it, but how do I pivot in a way that I think makes more sense for our business and our operating model?
I mean, in thinking about, as you mentioned, Costco, I'm picturing myself going to Costco and getting a Costco amount of pesto. And I feel that my diet would have to change in terms of utilizing that before it goes bad. How many different ways should I think about using, I don't know, 2 pounds of pesto, which I suddenly have, on an impulse purchase, come back from Costco with? How many different ways should I be thinking about the use of pesto at home these days?
Well, first of all, I'm sure your wife would be thrilled to bring home
She
a
likes
2 pound
pesto.
pail of pesto from Armanino. Um, but I think, we spend a lot of time with customers, and we have a full culinary team here of chefs. And we come in and we take one of our products. So, call it roasted red bell pepper. And what we say is, let us show you all of the different applications from breakfast to snack, lunch to dinner of how you can use this one sauce and you can apply it across all these different menu items. So there is incredible application. If you go onto our website, we have a lot of recipes. We're doing a lot of education so that not only consumers, but also our operators can see and understand. Because you just think basil pesto, it goes in pasta or maybe on a caprese sandwich, but there are so many unique ways to use it in the way we look at it, but also internationally. And from an international standpoint, how you use these flavors to really accent and add a lot to a meal preparation that is fairly affordable, but really elevates your dish in a meaningful way.
So, in terms of investors getting excited about what's here, they might want to just look at the chart and see the general up and to the right nature of it, especially lately. And another data point beyond the visual might be just the debt-free advantage that you have. Can you talk about what opportunities that provides? You pay a dividend. You've been buying back some shares. Uh, there are opportunities, I suppose, for acquisitions, but I don't know if that's part of the playbook or not. What are you doing with the cash that you have, and what would you like to do with it?
Mhm. So I spend a lot of time talking about capital allocation with my board, and our shareholders are very interested in that as well. And so I think historically, Bill, as you've talked about, the company has largely been using that cash to pay dividends and special dividends. And that's really, there's been some limited capital expenditures along the way, but nothing material. We started in 2024 a share buyback program. We approved $12 million. We spent about 7.5 million so far of that 12 million. So we've been also doing that in addition to our dividends. We just recently raised the dividend amount. So there's that on the capital allocation. And then for me, as some of the things we talked about in the beginning of growth strategy. So I think that the organization brought me in, the board brought me in to really say, how do we accelerate our top line growth? We've had really good growth. We've been in the high single digits for the last, 20 years. How do we get that up to the double digit mark? And how do we really start taking advantage of it? So as we do that, I am looking at different ways to say, do we have the capacity in our manufacturing to meet the needs if we were to get some of these tier one customers, if we were able to expand globally? So are we set up from an infrastructure standpoint? Number one. Two is looking at technology. I think we have a very, very small headcount here as a team. We're very proud that we're able to continue to grow with few people. And so for me, of like, how do I look at automation? How do I look at artificial intelligence? How do I look at technology in general to continue to help me continue to move with speed without having to just add headcount? So we're looking at all these aspects of investment in the business. My priority is invest to grow, but we are also making sure that we have that return on shareholders. And then I would say in terms of mergers and acquisitions, we're always open, we're always looking, but I would say it's not my top priority right now. Being a new CEO, coming in, getting my team in place, getting the strategy set is really where I'm focused now. But it certainly should something appear that helps us materially expand, grow, drive profitability, some of these areas, we would absolutely consider that.
Well, you talk about automation. That's been part of the margin story, which is a very impressive story in comparison to the competition and the margins that they're achieving. But you're also you've got uh, I don't know how many generations ago Italian grandmother involved in a heritage from that and an artisanal brand. I mean, is there any tension in terms of increased automation and increased production that comes into conflict with the artisanal nature that justifies the high margins?
Well, in terms of the product and the quality that really drives that uniqueness, that is the most important thing to me, is preserving what makes us unique and differentiated. And our quality, our taste, our texture are all things. I've recently been out in the market, spending a lot of time with customers, with chefs. They all say to me, Jana, versus the competition, there is really no competition in terms of the product and the premiumness. So keeping that is what will keep us on top, in my opinion. Second to that is the discussion about growth and the discussion about how do we expand, where do we expand, and how do we do it in a way that preserves what Armanino is about. And so those are always, lively discussions. But I think that and I spend a lot of time talking to people outside of the four walls in which I work to really get different perspectives. And I think that people are really encouraged by the opportunity of growth and how we can continue to bring this product to more people, whether it be in the United States or globally. So we're excited about that. But I am also, as you mentioned, Bill, profit. I'm very profit focused. So we have a very strong margin. Our Q3 was a record gross margin for us. So what are the things that I can continue to do that don't compromise that margin and keep us high?
Shifting gears, you spent time previously at Beyond Meats, a very, very different uh, animal from something with the history here. What did you learn from those times that either are applicable or are just worth recounting because there was quite a ride up and then down for shareholders, and I'm sure for management expectations. So, what do you take away from that?
Well, I really enjoyed my experience with Beyond Meat. The founder, Ethan Brown, really is a disruptor in that space and how he did it at a time that nobody knew about plant-based, and how he brought his history of the sports aspect of it and how plant-based can help athletes perform at a higher level. And he engage these athletes as ambassadors to really help him when he had no money, no budget, to get the word out there. And it was very, very disruptive and really caught on in a meaningful way. So Ethan, as a founder, I think is a very unique mindset that I was able to learn a ton from. But the big things, my takeaways there are really, we negotiated the global McDonald's and Yum contracts. And as part of those, we were doing a ton of innovating, testing and learning, really working with these operators on national and global scales and saying, how do we take this product to market? And that's really where I spent a ton of time in Europe, and we really built out the European business. I really cued into quickly that plant-based was really well received in Europe, and we started in the Netherlands, and then we started to build our base from there. And that was very, very exciting to see. And we did it through these national QSRs. So when you have a McDonald's testing in the Netherlands, Germany, and other places, it enables you to build your distribution in a really quick and meaningful way. So spent a lot of time with our national QSRs in that space. And then also kind of leaning into my past, I spent quite a bit of time at PepsiCo, and so we negotiated a joint venture with PepsiCo. They were very interested in getting into the plant-based space. And we were really interested to kind of get out of that fresh and frozen section. So we did a joint business venture and came out with a plant-based jerky. And so we developed it, Frito-Lay distributed it, and it was another way to get us into the retail channel. So I feel like Beyond Meat for me was this amazing opportunity to really see a loved brand that really kind of did have this rocky ride, but I was able to come in and help them from a customer growth, distribution, partnership standpoint. That I have taken a lot of those learnings, a lot of those relationships along with me that I am bringing to bear here at Armanino.
And some of those would be because you did go into the international elements of that part of the work and the opportunities that you have going international. What is the percentage of international sales right now, and where would you want to see that go if things work out?
So we haven't published the splits of our business at this point. International is a smaller part of our business, less than 50%. And but it is growing significantly. And so that is why, with my experience globally, both in Asia as well as Europe, and seeing the trends and spending time with these customers to see how they're using our product, what is currently in country. I really feel excited about the due diligence that we have done over the last several months to really identify the scope here. And then I am really reaching into kind of my Rolodex, if you will, of people that I have worked with in my past that really deeply understand these markets, but specifically their expertise is taking businesses that don't really exist today and to scale them. And so I think that for me is really where we have an opportunity for growth, but international takes a while. So it is a little longer on our pipeline in terms of when we'll start to realize that growth. But I'm planting the seeds in terms of having the conversations, putting the resources in place today to help us to start to build that out.
Uh, and there was some share buybacks earlier in the year, and now the stock is up 35% year to date, a little more than that over the past 12 months. So how do you look at share buybacks in terms of the price of the stock?
We talk about it daily. I was talking with my chairman of the board this morning actually about it. So we are constantly looking at the price of the stock. We are looking at the outlook of the business. We are looking at capital to say, from an investment standpoint, where does it make sense? Is it a value right now to buy? And is this the best use of our dollars to spend? These are the conversations that we're having about share buybacks. So when it was in the sevens and the $8, we were buying a lot of it. You saw that in Q1 and to some degree in Q2. And then when it went into the $10 range, high nines, $10 range, we slowed down for a little bit. But we are still considering we have dollars left that are approved. And we do plan to continue buybacks, but to do so thoughtfully.
Looking out into the future now, 4 or 5 years from now, are people going to be eating any differently than they are today? Any predictions on it could be your brand specifically, but not so much where it is just where it might be consumed. Certainly, economic cycles drive some of those decisions. But do you see anything that is on the horizon that we as consumers of food should be aware of?
Yeah, I think that there is a lot of trends, health related trends that are going on right now that is really affecting people's eating and eating behaviors. Um, and some in my old world that people are really cutting back on, but how I view for us, as I look at the next couple of years, but I look at the trends that are starting to emerge today. And they've been kind of this slow and steady, but you're starting to see the younger generations really embrace is really the spice and the flavor profiles that consumers are looking more so that in what they're eating and how they're eating it. And you're starting to see, there was a statistic that I looked at this morning on Technomics, and consumers said almost 50% of consumers said they would be more willing to try something different through a sauce and a unique flavor of a sauce than the food product itself. So consumers are very open to that spice, that savoriness, that sweetness that these different unique sauces have. And it can really, when you put it on a dish, it can truly transform the nature of it. And so for me, of constantly looking globally to say, what are those flavor trends? What is emerging? How do we bring that into a sauce standpoint? And how do we enable our customers to be on the forefront of offering new and unique things to consumers through that flavor profile? So, I know when I grew up, it was much simpler. We didn't have it. We had ketchup, we had mustard, we had mayonnaise, and that was about it. And now I see my kids, and they got sriracha, and they've got Tabasco, and they've got basil pesto, and they're trying all these different flavors. We were playing around with some basil pesto the other day, and we put Calabrian chili in the basil pesto, and it was like next level, and it was just such a great flavor profile. So there are so many different ways that we can play with it. But the encouraging statistic for me is that consumers are really open to trying new things through that sauce portal.
At 3 years from now, what will you need to have achieved to consider the next 3 years a success? Is whether it's a data point or something else? What would you say?
My goals are simple. I want to continue the success that Armanino has had over the last 20 years. So my goal is, how do I continue profitable and sustainable growth for this organization? How do I bring this brand to more consumers, whether that's through different day parts, different locations, different countries, so that more and more people than today. We're a small company today. I think there is so much opportunity for people to enjoy this product that we make, but I'm very mindful to say we are a public company, and how do I continue to drive value for our shareholders, keep a great P&L, but really do so by driving that top line and doing so profitably. So simple metrics. We have a great track record of that. So my goal is to continue the progress that we've had.
Well, I think it's been a great story so far. Wish I'd been investing in it for the last several years, but there's still time. About 300 million-ish market cap,
Yep.
a lot of room to grow in a lot of different ways. So I'd like to thank you. If there's anything you'd like to add before we wrap up that investors should keep an eye on, that'd be great. Otherwise, we can stop there.
Yeah, please check us out. We've got our investor site on our website, shows all of the presentation that Bill mentioned of our recent annual shareholder meeting. It was the first one we had in 20 years. We do plan to do that annually now, and really kind of getting the word out about Armanino. So now is the time to get into our company. The growth will continue. I feel really, really confident about our progress. But really, thank you, Bill, and thanks to your team for giving Armanino the opportunity to share our message with you and your viewers.
It's ticker AMNF. If you want to go out and do your own research before considering it any further. But thank you, Deanna, very much, and we'll look forward to keeping an eye on the story from here.
All right, great. Thank you, Bill.
Thanks.